This is my A plus continuation model that I think everyone should learn because it is so effective and you can trade with a high win rate, but ultimately really trade with an insanely high risk reward if you can catch conditions like these. So I'm gonna go over today explaining from A to Z how you can take these trades yourself as well and how to make 11 risk reward trading during the afternoon session on gold. So let's go in replay mode here real quick to show you guys everything that I was looking at in this moment here. So as you see, first thing I always want to focus on, I always look at is the daily bias. Okay, I personally don't go in the daily time frame anymore personally to look for my daily bias, but you can if you would like to. Clearly we are bullish, and the reason why is because we made this daily demand, and obviously on a daily we're going to the top right of our screen. That's all I'm looking at on the daily, to be honest. Otherwise I don't even need to look at it, to be honest, because of my daily bias indicator telling me that we are daily bias bullish. Now, where does my continuation model come into play? Before you even look for an entry model or PY, you look to the higher time frame, 4 hour, and see if you see anything. So for me, in this point of time, I did not really see too much aside from highs are weak because we're bullish. So because highs are weak, I'm marking out highs to target. We have this high here. We also have this high all the way up here to target. Now, if you go to the 1 hour, you'll see maybe highs more clearly, right? But again, these are still basically seeing the same thing, same picture on the higher time frame. So we just switch around time frames. I do notice at the time there was 30-minute supply above, hence why I was a little careful with my TP here. Like, sure, yes, price in hindsight played out and took out that high for 24 risk reward, but we did have 30-minute supply in the way at the time. So I didn't mind holding for this 11 risk reward. It was completely fine for me, especially after we taken out all three of these highs. Like, 11 risk reward is already a lot. I'm just going to take my money and leave the markets. There's no reason for you to go for like 50, 60, 70 risk reward. Those are very rare trades, and those are trades that tend to catch on assets such as oil because they trend very well with less pullbacks. Like on oil, there's less mitigation cycles like these, but on ES and Q gold, it happens a little bit more often. So just switch around time frames, and I don't really see too much here, right? 30-minute supply, but that was it. Because like I said, my draw here, ultimately, I believe that marked out was this high here right before the demand or right before the supply. So that was my target there. And if that's my target, let's look at the lower time frame. So if we go back in replay mode, pretending we're seeing price live, I'll show you exactly what my eyes were seeing here. Remember, when we're trading, higher lows, higher highs. This is the general gist of the market. An A plus setup, for example, one part of the Confluence A plus setup is trading pro trend and a liquidity sweep. So when a high or when a low makes a new high, so it's a new high, this low makes a new high, but we sweep this low, meaning we take out this low. It's your sweep, it's your break. I mean, everyone, I feel like in their mom have probably seen this like drawn out, but they don't know how to put this on candlestick charts and connect it to it. So that's what you see here, right? So we have the 5-minute playing out here. The 5-minute low here made this new 5-minute high. All right, and look what happens. This low that made the new high, we did a sweep. Why is this not a change in character or market structure shift? Is what a lot of ICT concepts people call it. Well, first off, a lot of people fail with ICT concepts. That's number one. Number two is because they don't understand that the draw is higher. We have pre-stay high here, and we ultimately really have the high intact here. These highs are all weak. This is all like trendline liquidity on the higher time frame. Okay. So because of that, this is not a change in character. This is a liquidity sweep. It's a fake change in character. That's what a liquidity sweep is. So once we sweep this low, my indicator even marks it here perfectly, to be honest, right here, the X, right? Like that's based on indicator marking. I'm gonna turn off my indicator for now here so you guys can see everything more clear. But we have this sweep here into a PY. This is even more A plus for me. This PY is unmitigated. You see how close it is to getting mitigated here? Pretty close every time, but these lows here do not mitigate. These two are equal lows. Again, I don't trade equal lows also, so it doesn't really matter here. The main point here is it's unmitigated. So let me actually refine this better. That is unmitigated. If you guys want to know how you can mark your candlesticks or zones better, by the way, just hold control on your keyboard and move your mouse to that point, and you can actually magnetize it so it's a lot more accurate like this. So this is the PY, okay, that we're looking at. And then I wait for my entry model. Entry models are dependent to person. People use different entry models, but for example here, this is your IFG if we close above. So if we close above, you can get an IFG entry model. So right here, you can see we closed above IFG. My indicator also marks it as well for you. You see, I know it's kind of hidden behind the candle right now at the moment, but it does mark it as well once we inverse here. So if you want to take the IFG entry model, this would be something you can take like this. But me personally, I took the OB entry model. It played out before. I got the OB entry model before the IFG, and so I took that instead of IFG. If I got the IFG first, then sure, I probably would have taken the IFG here to not miss this A+ setup, because it's an amazing setup. The OB, if you're asking me where it is, it's right here. This is the OB. Again, a lot of ICT traders call it a bullish OB. They define it as a bearish candle. For me, it does not matter about the candle color. I've done like extensive back testing on candle coloring, and I don't see much of a difference on the win rate. It's not significant enough, and it's most likely due to randomness. So candle color does not mean too much to me. I'm going to take this OB inch model, limit order here, coming to low, my target. Now, when you're trading pro trend, you're always going to either target the nearest high externally, or you target past the high and look for a PY. So previous day high is pretty close. I personally, if you're targeting this high, you might as well target previous day high at this point, because this is a liquidity sweep. Don't forget, if this was not a liquidity sweep and this was like a mitigation like this, I think in this case here, everything here is fully mitigated too. So this here is more so like an inducement takeout kind of trade per se. But like this would be a trade I probably would actually not even take. I'll probably miss it just because it doesn't follow my rules of mitigation. Everything here is fully mitigated. I would have waited for this anyway. So I would have missed this trade, but if you did catch this trade, like for example, this trade, because it's not a full-on liquidity sweep, it's not gonna be a trade where like it's as good to hold for further targets. Like for example, let's say you took this trade here, like it's not a good idea for a non-liquidity sweep trade to target past the high by a lot. And the reason why is because like you got taken out here. Why? Because this low here is not like it's not the strongest low. Strong low, sure, because this low made a new high, but there's no liquidity sweep that happened before. So once we do have this liquidity sweep, it ensures that, okay, this low should never ever get violated ever again. We can't have two liquidity sweeps back to back. Like we can't sweep here and sweep here. If we sweep here twice, it likely means we're gonna go to the downside based on my rule book of how I view structure. It just logically makes the most sense, right? What's the point of sweeping twice? This does happen sometimes within like PYs, but it's a kind of a little bit different story based on my testing. So again, here you can either target next high for 6 risk reward, or just target, past that high, 11 risk reward. You can even judge off momentum sometimes. Like for example, if I see there's huge momentum candles in my favor and it's getting close to the straw, I might as well just hold for it or trail my stop loss. How would I trail my stop loss? Trail it below each candle low. For example, if we have a lot of momentum. What's the reason? Well, because impulse model, right, could break to the downside very quickly, because momentum is good, going in your favor, but also at the same time, momentum can also signify if it does hit a valid PY, it will reverse very fast. So something to just be aware of, but this is basically explaining how I was able to catch the 11 risk reward here, guys. If you guys have any questions, you can feel free to join the free Discord server, ask me in there. Otherwise, if you need more help, one-on-one help, I have the mentorship open and the course link down below. So yeah, hope you guys have a great week trading, and I'll catch you guys in the next trade recap. Peace.